Uh, Thank you, Rajiv Talwarji. This is Anurag Singhvi from Xanadu Realty. Good afternoon, ladies and gentlemen. We have a very distinguished panel, and it takes me a great pleasure to moderate such distinguished people representing some of the largest companies in Indian real estate. We have Mohit Malhotra, who is the CEO of Godrej Properties. We have Venkatesh Gopalakrishnan from Shapoorji, Pallonji, who is the CEO there. Pavitra Shankar from Executive Director from Brigade. Reeza, Sebastian, who is President of Residential Sales from Embassy. So the theme for today is that what are the opportunities which real estate is seeing from the year 2021. Last 6-9 months have been really tough for all the Indian real estate. So I would like all the panelists to comment upon what are the challenges they have faced in the last 9 months, what are the learnings, and how do they see to overcome them in the next year. I would ask and Mohit to start off because he needs to leave in next 5 to 10 minutes. What are his view? What is his outlook? What is his outlook on consolidation? What is his outlook on the emerging trends in Indian real estate? So I would like to initially start with Mohit and then move on to questions with other panelists. So over to you,
Thank
Mohit.
Thank you, Anurag, and very good afternoon to everyone. The last few months have been challenging, but I must say that the way we have recovered is actually quite spectacular. Not just in terms of the industry, but also in terms of the overall economy and the crisis, the health crisis. The way government has managed it is quite spectacular. I think now, as Minister Sir was saying, that we have moved from survival to revival, and now I think FY21 will be the year of thriving.
Yeah.
It's actually quite heartening to see that demand is now coming back in the sector.
Yeah.
And the amount of time we have all spent in our homes, I don't think I have ever spent so much time ever in my life. And now I'm beginning to value homes a lot more personally, and I think the same is the case with most consumers. So the value of home is understood. Everyone has is who are on the sidelines have now taken a call to buy homes. So I think this epidemic has been is going to give a big boost to residential real estate space in the medium to long term. Of course, the pandemic is not over. People are still worried about their well-being, their jobs. So the real surge in demand, in my perspective, would happen once the vaccines are out and people come back to their normal life and the people feel more confident in their lives and their jobs. I think it may be a year from today when the real recovery would start. But I think the positive is people understand the value of homes. It's been depending on which market we look at, there has been a 5 to 8 years of either no price correction or some price correction across markets. So if we adjust for inflation, the prices are at a historical low. Your mortgage rate and repo rates are at historical low. So affordability is at all-time high. And COVID was one of the biggest shock which could have happened. Our industry has been going through numerous shocks over the last 3 to 4 years. So I think people have understood that probably we are at the bottom of the cycle. Prices have bottomed out, and from here on, positive cycle will start. Now it's anyone's guess whether it'll take 6 months or a 2-year time frame. But clearly, most people have understood that we are at the bottom of cycle, and hence people are starting to buy homes. So I see a very positive outlook in the medium term for our industry, and I think for the quality players like us who are all on the panel in front of me, we will have growth not just in terms of consolidation, which is a trend which is only going to accelerate over the next few years, and hence we will grow by market share gains, which has been a trend we have seen over the last 8 years now. but also the industry itself will be growing. So, we will not only see growth from market share gains, but the industry overall would grow. And I think future is extremely optimistic and positive, once we are out of this pandemic.
So Mohit, one of the things is that you are one of the few pan-India players, right? And if you see the last 6 months, some markets, which of the markets have performed better than the others? So like Bangalore has done better than Pune, or Bombay has done better than NCR. How has been your experience?
I think city-wise there was not much difference, Anurag, because clearly the pandemic was across cities,
Yeah.
and if you look at historically, NCR has been one of the worst performing markets from industry perspective. The
Yeah.
prices in Gurgaon are down by almost 30 to 40% from their peaks. So I think before we entered pandemic, there was a very large difference across cities. I think the effect of pandemic has been quite consistent across cities. But what was very heartening, Anurag, was that we see a very strong. Just give you some statistics. In the first quarter, when we were all practically locked down in the homes, we sold close to 1,500 crores of real estate completely online. Uh, and if you look at the first half of the year, we have sold more than 2,600 crores of real estate, and actually grown over the last year comparable time. And also, some of the recent launches, whether it was in, we had a launch in Faridabad in NCR, which was a mega success, practically sold out. And we had a launch in Bangalore, where we sold more than 6 lakh square feet in a project called Godrej Royal Woods, which is near the airport. So across cities, the customer demand for quality players is very strong, and I'm sure all of the other players are also experiencing the same trend. And I feel the mid-income space has been pretty resilient.
Things which people always say that luxury market has been consistently underperforming for last 5-6 years. A lot of luxury projects are actually ready and ready to consume. Did you see any great movement during this period that luxury market doing better than before, or some people who are on fence sitters coming and buying them?
See, we don't have too much exposure on luxury segment.
Okay.
We've been very consciously stayed away from the segment. But I would say, if you look at premium segment, which is where a project like Godrej RKS, I would classify, or a Godrej South End in Delhi. These are premium developments, and thanks to the rate cut which happened in Mumbai, there was a good offtake we saw in project like Godrej RKS.
But broadly, you believe that the affordable and the mid-income segment has been resilient.
Yes.
What is the kind of price correction we've seen in 6 months? Have been there significant or a marginal price correction across?
We haven't done any price correction,
Okay.
Anurag.
Yeah.
There were some schemes which we ran opportunistically in Q1, which was on payment plans, but again, those were withdrawn at the end of Q1.
Yeah.
But really, no price correction.
No price. So effectively, the price correction is in the payment scheduling or something like that.
Yeah, in the Q1 that was done.
Yeah.
Even that is now withdrawn.
That's all withdrawn. So I think one of the good things about the pandemic is that now everybody believes that the pricing is rock bottom. Everything that worse can happen has happened, and this is the price. I think below this, everybody now believes that the production cannot happen. So I think that's a good thing. This is what you're seeing across the board, that people are believing that this is the rock bottom price.
I think so. I think it's a situation where most people are now believing, and we are seeing even some of the investors coming back in the market,
Yeah.
which is a positive trend, because investor return is important for a revival of the overall growth of the industry. So I do believe the prices have bottomed out now. When they will start rising is a $1 million question.
Mohit, one more thing, right? I think you need to leave by 1 o'clock. I think you are one of the few companies which has grown significantly over last 5 years, right? What do you see you're trying to continue to have the same growth curve? Because number of projects which you have added is significant, right? I don't think anybody else has added the kind of square footage which you have added to your portfolio, right? So do you expect that to continue? Because that means that you are extremely positive going forward, right?
Yeah, yeah, Anurag, I think uh, if I just give you some statistics, I joined the company in 2010, which is
Yeah,
exactly 10 years from today. And over the 10 years, we have grown 12 times in terms of sales. And that was in the middle of the worst, down cycle,
yeah.
which has been there for almost 8 years now. Uh, I don't see any reason why we should not grow uh, at least by same level when the upcycle will start. So I'm actually quite optimistic and bullish about future, and I think the kind of investment we are making is a clear testament to our beliefs.
Thanks, Mohit. Any other questions which any attendees want to ask Mohit? Because Mohit needs to drop off now. And so we are keeping the time, Mohit, 1 o'clock, I think was sacrosanct on your side. So we will drop you off. Okay. And
I
I'll just ask other, yeah, Mohit.
No, I really wanted to thank Anurag, you and the entire forum
Yeah,
for this opportunity, and I really appreciate that we could accommodate my request. I do look
yeah,
forward to catching with all of the participants in future.
yeah.
Thank you very much, and best of luck.
Thank you so much.
Thanks, Mohit. Thanks for
Appreciate your presence.
joining us. Yeah.
Thank you.
Uh, yeah.
See you.
Now, actually, I would now like to open to the other panelists. Sorry for this, Venkatesh, Ashokji. Ashokji, I forgot to introduce you, but Rajivji already introduced you, and so I said, what a question I asked Mohit, right, is that, how each of you actually reacted to last 6 months, and how do you see the outlook in 2021, right? Uh, because each organization, you are the thought leaders in the industry. DLF created Gurgaon, so they are clearly thought leaders. Embassy is one of the companies which is entered into new emerging areas like co-working, and so is Brigade, and Shapoorji is one of the leaders. So you are all thought leaders. How each of you, each of you companies reacted to COVID, and how you have prepared your organization for 2021? Thoughts from all of you would be great. Starting with Ashokji.
Okay. So thank you, Anurag.
Yeah.
Obviously, I would like to, I truly enjoyed the secretary's interaction, even though it sort of overshot. But I mean,
Yeah.
really, he was very, very passionate about what he was saying, which is a very refreshing thing from a bureaucrat, frankly. Okay. So, the first 3 months, at least the first 6 to 8 weeks, were clearly, a big wake-up call for everything. And
Sure.
if you ask me, I don't think, sales or profitability or cash were the objectives at that time. The biggest thing at that time was safety of
Yep.
tenants, safety of employees, and safety of the residents. So, like
Sure.
most of the condos that we run, we clearly had almost between 100 to 200 people staying 24/7 there for months together in the basements and in adjoining spaces to service the residents, in that sense. Same for tenants. And our biggest concern at that time was that apart from the physical safety, by when would the construction workers start coming back from the site, in that sense.
Sure.
So really the Q1 was, I'd still say, a more of a, sort of a getting to prepare thing, really. I mean, the three segments that we play in, which is residential, offices, and retail, all the three reacted differently. Offices, which everybody was, most concerned about in terms of the fact that work from home will create a lasting damage and all of those things. And actually, if you see the collection numbers, etc., not only for us, but even for, say, the listed REITs, etc., actually, that's been the biggest positive surprise. Because most of the tenants, the collection levels are 97, 98% plus. The vacancy levels have moved. I'll be very, very transparent, but they have moved by maybe 2% and not by a earth-shaking number, in that sense. So clearly, by the end of Q2, in fact, we believe that the offices segment is now, at the fag end of sort of, shaking off the short-term impacts of this entire thing. In fact, we had 3 big developments that we had sort of, we were about to start when the pandemic hit. And we are now back to putting the capex on all the 3, 2 in Gurgaon and 1 in Chennai. And I think clearly, hopefully by 22, the phase 1 of all of those 3 would be ready, adding about maybe 7 odd million square feet of further leasing spaces, which we believe by that time the demand would have come back. Retail segment was obviously completely shut for the first 4 odd months, in that sense, frankly, and parts of it like cinema and F&B continue to feel the effects even today. We, along with some other major retail chains, unilaterally announced waivers and rebates of rentals and minimum guarantees for tenants. The theory being, if the tenant is not earning money, you should also not be earning money in that sense. But I think again by September, the retails have begun sort of waking up. And while I've seen even more healthier numbers reported by other people, at least in our segment, I think clearly we are in the 60 to 70% of where we were in the pre-COVID COVID spaces. In fact, in some luxury malls of ours, the Diwali 20 sales have actually been comparable to Diwali 19 sales, if not better in some segments, in that sense, frankly. So that is there. Residential Q1, we were clearly, we took a quarter to fully get our plans into shape. We also deferred the collection installments of a lot of our customers, which were falling due in Q1, because in that sense, we reflected the RBI moratorium that we gave them people generally 2 to 3 months extensions of whatever their collection installment timings were. But from Q2 onwards, frankly, the sales and collections have both bounced back. In fact, our Q2 sales volume was, I think, the best in the last 4 or 5 quarters, even before the pandemic. And we used this period to also, sort of rejig our entire launch pipeline. And in Q3, we have launched, a set of luxury independent floors in Gurgaon, priced about 3.5 crores each. And the first launch of 88 floors at about a 300 crore launch value was actually sold on day 1, in that sense. So clearly, we are now actually figuring out the follow-up launches given the success of that. Similarly, our super luxury product, the Camellias, which actually was sluggish even before the pandemic, in Q2 actually had a historically robust sale. May have been the pent-up demand, to be fair, I'm not sure whether it will sustain, but it had a very good Q2 again. But to reflect on Mohit's point, clearly the mid-income and the premium segments are the ones where I think there'll be sustainable growth and sustainable demand. And I think that's where a lot of our new launches will be around. So, we aren't going to hit the 30 lakh segment, but clearly the 75 lakhs to 2 crore segment, I think you will see a lot of launches in that segment coming up. And then the 3 to 4 crore segment, which is where these independent floors and our next launch in Delhi, which is the JE with GIC. So all of those things will happen. So clearly, things do looking, it appears to be like that the recovery, whether it's a V or a U or whatever, I'm not sure. The recovery has begun in the residential spaces for sure. The mortgage rates are at a historical low, frankly, it's 6.6, 6.7%. You can get a housing loan. So I think this is the time for people to start putting all their strategies in place for construction, for marketing, for sales, and from a cash flow unlocking standpoint. Anurag, I'm sorry, I'm unable to hear you.
Sorry, Reeza, what are your views on how you tackled, because you are primarily residential, and and how did you look at the pandemic, and what is the outlook you're looking forward to?
Thanks, Anurag, and a warm welcome to all the participants, and very happy to be a part of this panel. I think ever since this lockdown was announced on the 24th of March, Embassy's singular goal was to provide residents and employees with the confidence and assurance that their health and safety was our first priority. Pretty much like what Mr. Tyagi said, we had a very, very strong response team being set up on our sites so to ensure that customers are taken care of. So customer centricity, I would say, form the heart of all responses. And the way forward would be to ensure that we deepen the understanding of customers to develop very differentiated experience. Something from the real estate side, we would say that adapting to technology has been key, both on brand side and the construction side. Very, very important. Brands have been given a chance now to reinvent ourselves, to generate content, to create a much better online experience. So we've had to quickly change course, enable a brand experience for a customer who's sitting in the comfort of their home. But since it is a very extremely high involvement purchase, what we are seeing is that human interaction is very important in real estate. So while we can enable the discovery process online, a visit to the site is imperative to close the sale, and there is no way out of it. But from the construction side, we're saying that upskilling is important, automating processes to improve ease of delivery is important. A day of delay is adding to the cost of the project, which is unviable given the margins the developers are working with today. And maintaining tight cost control, given the fact supply chain disruptions were there, labor migrations were there, has been the challenge that we faced. Evolution of real estate as the preferred investment class, it may today seem like a paradox, but the pandemic has actually catalyzed this housing demand rather than suppressing it. And with the lowest interest rate in the last 15 years has pushed the affordability index for the buyers, so increased by about 15 to 30%. We continue to talk about the middle income households. We are saying that that number will triple to about 89 million by the year 2025. India's savings, is very fundamental to the Indian ethos. Family savings, appetite, the opportunity to invest into a valued market. So there is a pressure on both demand and supply of this particular category of buyers. So when there are low launches, I would assume that invariably the prices are only going to go up.
Oh, that's a positive.
Yes, it is definitely a positive, because there is on the one side the slow launches, and with demand where it is today, invariably that's going to pan out and the prices are going to go up. We're also seeing from a trend perspective that there is a demand for self-sustained integrated townships and developments that provide lifestyle amenities. Customers are today looking to upgrade their living spaces. There is a requirement for functional, flexible, tech-enabled homes, more focus on sustainability, and the fact that what we're also seeing is that there is a preference for plotted and low-rise developments. That's a clear trend that's coming through, and customers largely favor risk-free investments. So credible developers will occupy the larger market share, and whoever has over the years a proven legacy to deliver on commitments clearly has an advantage in today's marketplace.
Reeza, I'll just ask one question. How has been the online sales experience, right? Because a lot of sales try to move online in the first quarter. How do you see that happening? Has people's behavior changed buying online, or is just one of the enablers?
So interestingly, Anurag, we actually launched an online booking portal way back in the year 2018. Okay, so we did not wait for COVID or anything. We actually moved our entire, our process online. So data analytics has been extremely strong, and that actually gives us a headway. We are also saying that while customers today, if they have to make a purchase, they actually do a round of almost 10 developers in a given micro market. So they are able to sit and do that. And with adequate payment schemes, we are seeing that customers actually come back very quickly and are able to make sure that the sale goes through in a much more effortless manner. So the customer is well informed. The consumer behavior has changed in that sense. He walks in, he's already informed about all the products, all the pricing in that particular micro market. He walks into the office and he's ready to close the deal.
Yep. So Venkatesh, please give me your thoughts on the same. How you have, because Shapoorji again is pan-India, how you're able to look at different markets. How were you able to look at the outlook from, how are you looking at 2021 going forward?
Yeah, thank you, Anurag, and good afternoon to all the participants. So I will break this up into three parts. One is the, if I may say so, severe supply side disruption, which basically came in March and right through to June, July. Now, apart from our real estate development sites, we had construction sites across the country and across the world. So I think our focus was twofold. One was to ensure the health and safety and protection of our labor force, which across the Shapoorji Pallonji group was more than 100,000. And the second was to, as the other participants have also said, to ensure the health and safety of our customers. Frankly, this was very unexpected, very unprecedented, and immediately our response was to jump to try and see that the labor force is comfortable and the customers were comfortable. We were frankly not focused on business because there was uncertainty over there as to how things were going to unfold. Now, on the supply side, I would say that we are pleasantly surprised that while a lot of the migrant labor chose, and rightly so, to go back home when they could in June, a lot of them have come back. And if you see our sites across the country from September onwards, there has been quite a big uptick, and we are nearly at 80 to 90% of our pre-COVID labor force. So that's, I think, a very good sign of for the entire industry. The second is the demand side disruption. I think we are all aware that we came into this pandemic with quite a weak market, especially for residential. And April and May were a little washout, but to our surprise, I think things started bouncing back a bit from June onwards. We took a call as a company to continue with our launches despite the pandemic. And we did have a launch in July, which, I must be frank, did not do too well. But going ahead, we had one launch in the month of October and November, which did extremely well. In fact, it did better than any of our launches which we have done in the history of Shapoorji Pallonji. Because of, I think there is a pent-up demand. There are savings also which people have accumulated over the past 6 months being at home. All of us, I'm sure, have been as austere as possible in the last 6 months. But I think we should be cautious. There is pent-up demand. We have to see it from a medium to long-term point of view. The macroeconomic factor, one macroeconomic factor, which is the interest rates are in favor of residential demand. One is not in favor because there's going to be degrowth this year. So when growth resumes, probably next year, I think then we can firmly say that there is going to be some consistent and sustainable improvement in the real estate demand. The third thing I would like to talk about are certain behavioral changes, both from developers as well as customers. I think my fellow panelists also mentioned that information technology online is going to play a very large role. The way we assess risk, both from the supply side, demand side, and the financing side, is going to be something which all of us have learned a lesson over the last 6 to 8 months. And frankly, this year is a year where we need to just survive and sustain and be and kind of have a springboard to have growth going ahead. As a group, we are very positive about the residential sector. I think first there will be a pickup in the velocities, and then there will be a pickup in the prices. If you have the ability in your margins to sustain, let's say, no increase in price over the next 1 year, I think you will be able to sell as provided that you deliver and you are a good brand. So also dealing with people, we are a large organization. I think the real estate franchise is only 700, 800 people, but we have more than 60,000 people across our company. Dealing with people, the human side, etc., is a learning which is absolutely unprecedented. To summarize, I think you always become stronger in difficult times. So I think the industry will come out stronger. There will be consolidation vis-a-vis customer preferences and also vis-a-vis the developer community. But I think a lot of the pain is behind us. People who have survived and will through this will come out stronger. And we expect a very, let's be cautious over the next 6 months, but I think 21, 22 will be a much better year for residential real estate. Quickly touching upon commercial, we own a few IT parks, not too much of impact, as Mr. Tyagi also mentioned. I think rentals are back. Rentals picked up from May, June onwards. We had a logistics foray with a large sovereign fund. We have kept it in the back burner as of now, and we are looking as to how things will pick up. But having said that, I think logistics and industrials as a sector through this pandemic has emerged even stronger, and we feel that there is a lot of promise in the medium to long term on that front. So I think that's in an overall nutshell as to what our thoughts are on this entire issue.
Thanks, Venkatesh. I'll just invite Pavitra to give her views on how Brigade has faced the issues and challenges and how they look forward.
Thanks, Anurag, and thanks for the opportunity to be on the panel, and nice to meet everyone here on this forum. Well, I have a lot of stuff that will probably echo what most of the other panelists had to say. So what I would do is just sort of talk about the different stuff. Yeah, we definitely went into preservation mode. I think our mantra has been, how do you survive, stabilize, and then grow? And because we have multiple different businesses, we're in residential, office, retail, and hospitality. All of them are, in different parts of that particular cycle. In residential, we definitely had a big impact on our Q1 sales. We were at 40% of what we normally do, but Q2 has been back. In fact, we are at pre-COVID levels on the side. So for that sector, we are definitely looking at growth. I think in this kind of environment, when there is major disruption, the natural instinct is to sort of sit tight, but we all have seen how quickly the market will come back. And so for the residential sector, we are going to be pretty aggressive about what our launches are like and the numbers that we want to do for the rest of the year. On the office side, again, yes, collections have been normal at 98% levels, but leasing activity is slowly picking up. But we see some good interest. I think most companies are sort of figuring out their workplace strategy. So there's no one size fits all kind of strategy in that sector. So that's yet to be seen. But we're still positive about the sector in the long run. Retail, Karnataka has actually been fairly open despite all of the lockdown being lifted a few months ago. So retail is slowly picking up, but it does require a lot of effort, a lot of relationship building and maintenance with our tenants, which is ongoing. I think hospitality is sort of having the worst of it, again, with travel being impacted so much. So that is the one where even though our hotels have been open, all 8 are open, and we are in operational break even, but we still need to be in survival mode for that one until things really come back. On our organizational front, I think some of the other panelists have mentioned, it has been a huge learning experience. How do you move an organization that's over 1,000 people to, stick together during such a tough time and sort of communicate what is required to get through the tough times, but also look ahead and see to what the future can be. So that's been a big thing for us. So in terms of the calendar year, it's a mixed bag depending on the businesses, but we're very positive about real estate, about the economy in general, and I think we need to all keep in mind that COVID, yes, it has accelerated a lot of trends that were anyway underway, but we all need to figure out how we are going to stand in the new world that comes out after that.
Thanks, Pavitra. I think Reeza also needs to leave. Reeza, your parting comments on, what different you would do in 2021 as compared to 2020, and what do you see that, would be some trends which you see in 2021?
So, I mean, I would like to go back and touch upon the fact that we as Embassy have pioneered many industry firsts, with our futuristic developments, asset classes way ahead of its time. We were known as residential developers 30 years ago, but we've shifted focus. We've done commercial development in Bangalore since the year 2005 by shaping the concept of integrated business parks in India's Silicon Valley. After that, it has been about warehousing in 2012 with Embassy Industrial Parks, the franchise of WeWork in 2017. We are at about 57,000 desks across 6 cities. Co-living was launched in 2019. We scaled to about 100 facilities by 2021. And actually the latest announcement of Embassy actually venturing into senior living in October 2020. So there is a focus on flexibility and key requirements of end users, and that's going to be the way forward as far as the shared market is concerned, and it's going to be a very important part of how India's real estate industry is going to pan out. I would say that as a country, our real estate market fundamentals are extremely strong. And because the industry employs over 49 million people, and it is the nation's largest employment generator, effect over 250 allied industries. So this is going to be a very focused industry, should be focused on by the government. The three fundamental factors which I continue to remain and which I monitor very strongly is the fact of shifting family structures. Nuclear families are still on the rise, projected to increase to about 74% by 2025. Why is it relevant to us as marketeers? Is because nuclear families spend almost 20 to 30% more capita than joint families. The continuing urbanization, so city centers will not lose their relevance over a period of time. 10 million people are migrating to cities every year. 40% of India's population will be living in urban areas by the year 2030. And the fact that the rising in affluence, right? So India's income pyramid is transforming very quickly into a diamond as household incomes grow. So the elite and affluent will occupy about almost 40% of the consumption. So these factors, I would say, that would be the reason why India as a growth story still remains extremely relevant. And COVID has only brought about a very unique and time-bound opportunity for us to respond and reset some of the baselines for the construction sector in India. And this is a true test for all of us as businesses on what will differentiate us, what will our ability to handle such times by adapting, by staying agile and reimagining the new normal. So these are my thoughts.
Thanks, Reeza. Thanks for joining us.
Thank you.
My questions next to Ashokji is, right, Ashokji sir, you have not, so there are the emerging economy themes like the shared economy, we have this industrial parks. Is DLF participating in them, or what are the views of DLF? Because you are the thought leader in NCR, or you're just focusing on the three parts, which is residential, retail, commercial, office?
So obviously we are focusing on those three, you're right. We have signed up our first data center deal, and we are setting it up in Noida with a Singapore-based company. So let's see how it sort of works. It's our first pilot. I think it's about 300,000 square feet, if I'm not mistaken. So it's a first data center experience. I mean, data centers, everybody says is going to be a big sunrise area for the future. Let's see. There are other pieces like including logistics and industrial parks, rental housing. I mean, I think they're all great concepts, but we would still want them tested commercially before sort of venturing into them ourselves, frankly.
Because these are early days. That's what you're saying. These are early days.
These are early days, and I'm sure a couple of mistakes would be made in the early days, and you would rather have somebody else make those mistakes than us.
Venkatesh, I just want to ask you, because you are a few players who, like DLF was the player who went pan-India, and then they again focused on their main geography, while you have gone to multiple locations. And plus you have been expanding through doing different joint development agreements and DMs. What has been your experience, and how do you plan to grow in, because you will be one of the consolidators going forward. So how do you see, what has been the experience so far, and how do you see that in the next few years?
Okay, so on the commercial platform, which is the commercial leasing, we actually are pretty much a pan-India player. In fact, in Chennai, very soon we'll actually have a 15 million square feet, footprint in Chennai, and a significant one in Hyderabad as well. Bangalore is a city which so far we haven't ventured into, but I'm sure at some stage we will. On the commercial piece again, we thought that we will partner with a world-class player like GIC and clearly leverage their experience as well. Otherwise, frankly, while there are a lot of opportunities for consolidation that are emerging in the sector, because the stress that's been there, especially in NCR, So far we have not been tempted to go there, Anurag, for two reasons. One is clearly, I mean, itni mushkil se, one sort of, cut down the debt levels, and then before you realize, you start building it up again, which is something that you don't want to do. But more importantly, most of the projects which are under stress come with their own history of consumer issues, customer issues, litigations, etc. And even if you are getting a damn good price on the face of it, do you really want to go into? So if I was entering a new geography where I did not have land, maybe that is the route I will take. But where we have enough development potential of our own in many of these geographies, we are there. Even on the residential front, while in 2010, obviously, we opened the residential front across the country, we have actually stuck to our commitments and delivered on most of those projects. We still have certain land parcels in certain locations, and I think clearly we are now in the phase where we are working out strategies to monetize each one of them individually, and let's see how it pans out. But clearly, I think this is the time to begin monetizing those individual land parcels also through development, and whether we grow more in those geographies or not is a decision to be taken later. But clearly, we do need to develop the land parcels that we already own in those locations, be it Chennai, be it Lucknow, Indore, Mumbai, all of those things.
Venkatesh, what are your views on consolidation? Because you are one of the consolidators in the market. You have been growing very fast in the past.
Yeah, so I think Mumbai and Pune remain our backyard. We are also present in Bangalore and Kolkata, and in Gurugram we've just made a start. We did have an IT park in Chennai. We have some land parcels in Hyderabad. So I think let me answer this question in two parts. I think over the next 5 to 7 years, we will continue to focus on these top 6 cities and try to consolidate or grow our position there. Being a construction firm, also our offices over there being plugged in, in the various metro cities gives us an advantage. We also are, have a huge land holding, which we have a huge land acquisition team. So we understand that bit. Of course, the regulations and the approvals are quite tricky in different geographies where we don't confess to have mastered that all. But we do take, help of our partners over there. So in that manner, I think I would say that we have about 80 to 100 million square feet focused on these 5, 6 cities. We will continue to focus on those. But if you have a long-term plan, a 10, 15-year plan, I think it is inevitable that large companies like ours or all the companies on this panel would be going into tier 2, tier 3 cities also, because there's going to be a lot of middle income demand, aspirational housing demand over there. But we would go about it in 2 phases in a cautious manner. We'll kind of grow in these 5, 6 cities and then probably go to the smaller cities. I think that's overall what our plan is.
Questions to you, Pavitra. First thing is that you are consumer-centric, Brigade. How you're looking at different kind of consumer behavior regarding ready inventory versus under construction inventory? Which are the products which are moving faster?
Yeah, it's a trend that we've been seeing over the last couple of quarters. We've definitely seen that ready to move is finding more favor with customers today. Obviously, even in the past, they were getting the benefit of not paying GST on OC received properties. But I think a lot of it is mindset related post COVID. So that has sort of seen, and ready to move inventory has taken a larger proportion of our overall sales if you look at the entire portfolio. And so I think that is going to be a sustained trend. It's also because the market is getting more and more skewed towards the end user customer. And in markets like Bangalore and Chennai, where we have been playing for a longer period of time, this was anyway the case. There was less of an investor and definitely hardly any kind of speculator type of customer in that market. So since the end user has sort of come back on top, we see that this has also driven the need for completed inventory. And therefore also slightly larger units. I wouldn't go so far to say as super luxury or very premium housing is sort of back in the cards. We again play in primarily mid-segment housing. But you can very clearly see that the preference is for literally like an additional bedroom for that flexibility of floor plan and workspace and so on. So while we've looked at the data also, it's around like 150 to 200 square feet that you can see an increase in the average transaction size. So these are kind of the trends that are happening. Of course, there is still appetite for new launches. And I think that is just how the industry is really sort of set up. People would like to see the appreciation and would also like to have first choice on inventory when it comes out, which is again a sign of end user market. So these are sort of the trends that we've been seeing close to the customer. I think Embassy, Ms. Reeza, Sebastian also mentioned the same thing. Integrated developments is something that has always, found favor with customers, especially because during a COVID time, especially, we saw that many of them were really, relieved to be in environments where they could not have to really leave and get all of their needs met within the same integrated township. And at Brigade, we've been doing these since the year 2000. We are actually constructing our 8th township in Bangalore today. And so across Bangalore and Chennai, integrated townships are a very important part of our strategy. So between those two, I think it's important to keep track of also the demographic changes. There is a lot of shift towards senior homes as well, and we play in the senior living space as well. But all of these things take time to sort of play out, to really truly understand the customer, and to be able to design products that will still hold good 4 years or 3 years from now, whenever it comes to delivery. So it's really important to stay in touch with the customer, and we're continuing to do that during COVID as well. In fact, some of the important things that we did was have customer webinars where our existing customers could actually reach out and ask us questions about how much will construction be impacted, what are the delays going to be like, will there be any payment plans for existing customers, all of those things. So I think it is extremely important to stay close to what the customer is thinking today.
Pavitra, do you have any growth plans next year? 2021, I want to grow. In sense, you have an existing portfolio, but you want to acquire more, or do you see opportunities out there, or you just see that just do what we have?
Absolutely. As I mentioned earlier, we are very bullish about the residential sector. We do have office portfolio as well, and we still continue to search for new land to develop office. Again, I feel what is happening right now is some companies may be having like a knee-jerk reaction to their workplace strategy, but in the long term, especially in office, I think this will sort of get consolidated. In residential as well, we have plans to keep growing our portfolio. In the last 2 years, we've done our highest ever numbers, 3 million square feet and 4 million square feet respectively. So we have the pipeline, we have the land bank, and we continually search for land bank that can be developed in a 5 to 7 year time frame. So we're not accruing land bank for the long term. We intend to develop it immediately. So our plans are definitely to grow. Our markets that we play in are Bangalore, Chennai, and Hyderabad. We get questions all the time about Mumbai and NCR, but I think these are our core areas of strength, and we will probably stick to these areas, be sure of our presence in those markets before we really think about going out of those markets. And all of these markets give us the opportunity to play across the different spectrums of 4 different lines of business. So I feel there is a lot of opportunity there.
Thanks, Pavitra. I think I need to close the session because another session is starting. So I'll just summarize this. I think all the panelists are cautiously optimistic. The office space is coming back. It obviously had a 6-month lull, but it's going to come back. Real estate prices have reached the bottom. It can only go up. When it's going to go up, we don't know, but I hope very soon in the future. The emerging plays like industrial parks, data centers, shared economy, they are emerging, but still nascent in this thing. Consolidation will continue to be a theme. Players like yours who are big, have strong balance sheets, will continue to capture market share. What I could see from talking to you people is that 2021 would be a good year for real estate. I think everybody is optimistic about it. Last 6-9 months, everybody has introspected, survived, and now looking for growth. So that's where I think the panel is about. And I think we had great discussion with all of you guys. We had, I think there has been some learnings for all of us, and we are all very optimistic about 2021.
Thank you.
Thanks,
so much,
Ashokji.
Anurag.
Thanks. Yeah, thanks,
Thank you,
Neetu.
Anurag. Thanks for
Yeah.
ably moderating this session. And I sincerely thank Pavitra, Reeza, Ashokji, Mohit, and Venki for making this session a success. And I apologize for the time overshoot. Thank you so much for your insights.
Thanks. Bye.
Thank you.
Thank you, everybody.